Hello and welcome to Midas Markets Daily News. Let's kick off your trading day with the latest financial news and market headlines.
Hi traders, this is Jason with the market update. The US dollar index first dipped to its lowest level since 2022 before recovering on Wednesday to trade near 96.95. Traders digested the latest Fed decision where policymakers cut the funds rate by 25 basis points and signaled another half point in reductions by year end, slightly above June's outlook. At the press conference, Chair Powell stressed that inflation risks since April have eased, framing the move as risk management, not the start of a new easing cycle. WTI crude slipped to around 63.65 on Wednesday, pausing a three-day rally as traders weighed supply risks. Reports suggested Ukraine's drone strikes hit key Russian export terminals and refineries, with Transneft allegedly warning producers of possible output cuts. Later, the operator denied the claims, calling them Western disinformation. Meanwhile, European officials pledged to accelerate efforts to reduce Russian fossil fuel imports and press for tougher measures against Moscow. Gold pulled back to around $3,660 an ounce on Wednesday after briefly touching a new record high of $3,705. The Fed cut rates by a quarter point, with Governor Stephen Millan arguing for a larger half-point move. Policymakers pointed to slowing job growth and stubbornly high inflation, underlining risks on both sides of the Fed's dual mandate. Despite the pullback, gold is still up about 41% this year, supported by central bank buying, safe haven flows, and demand fueled by a weaker dollar. The Japanese yen weakened toward 147 against the dollar on Wednesday after soft trade data reignited concerns about the export-driven economy. August exports fell 0.1%, marking a fourth straight monthly decline, largely from a 13.8% drop in shipments to the US. Imports slid 5.2%, less than July's pace, but worse than forecasts. The Bank of Japan is expected to hold rates steady at 0.5% while balancing domestic and external risks. As widely expected, the Fed delivered a 25 basis point cut. The euro jumped to 1.192, its highest in 4 years, before retreating toward 1.18 after Chair Powell cautioned that the Fed is still data dependent and that its projections are not a preset path. In Europe, policymakers remain wary. ECB board member Isabel Schnabel urged caution, citing risks ranging from tariffs and services inflation to food prices and fiscal policy. The ECB held rates steady for a second consecutive meeting last week, hinting its own cutting cycle may be over.
We hope you enjoyed today's market outlook. If you have any questions, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news.